I know what all of you are thinking. It's a great time for a snack break, but psych, we are breaking from our typical pattern for the day, and we are going straight into the next session, which has been the most hotly awaited session, and it is global adoption of stablecoins. So as the chairs kind of pop up here behind me, I'm really excited to welcome Alex, the Chief Product Officer at Borderless, Jess, the CEO at Wallet Connect, Lou from AAA, and the one and only Chris Maurice, CEO of Yellow Card, and May, the head of crypto at PayPal, all experts on stablecoin adoption across LatAm, across Africa, across Asia, all these kind of exciting jurisdictions where we're starting to see things pop up. So thank you, everybody.
Well, hello everybody. Test, test. Is this alive? Can you guys hear me? Hello, hello. Sounding better? A little bit more? Okay. Perfect. Welcome everybody. You guys ready to get started? This should be an interesting one. So, as Kevin mentioned, I'm Alex. I lead product here at borderless.xyz. I am the luckiest moderator so far. Can we get this turned up a little bit so that I don't need to totally yell? Up a little bit? All right, sounding better? All right. Yeah, luckiest moderator of the entire group here because I have an A+ team of panelists. So we are really, really excited to get started. Thank you all for joining us. We could not be more excited. So I'm going to start with quick introductions just to let you guys kind of introduce yourselves, kick it off, and then we can go from there. So Jess, I'll hand it over to you.
Thanks. Hi, I'm Jess Holgrave. I'm the CEO at Wallet Connect. Wallet Connect is a network of over 700 different crypto wallets that connects into over 60,000 different crypto applications. This year we'll facilitate about $400 billion of transfer between those apps and those wallets. Yeah, very happy to be back.
Hey everybody, I'm May Zabana, head of crypto here at PayPal. Obviously, you may have heard about PayPal and Venmo, so I won't do too much of an intro there, but essentially our mission here is to revolutionize commerce and through our platforms for both consumers and merchants around the world.
Yes, Chris Maurice. Hello? Is that working? Thanks. Chris Maurice, CEO of Yellow Card. We are the largest licensed stablecoin payments infrastructure provider for emerging markets. So working across Africa, Southeast Asia, South America, parts of the Middle East, and working with large banks, large corporates, large financial institutions, helping them get into the space in a compliant and safe way.
Hey. Lou LaRochelle from AAA. I am the Director of Americas for AAA. We are a global stablecoin payment company, and we enable merchants and financial institutions globally to pay in and pay out in stablecoin and other fiat currencies.
Wonderful. Well, May, I'm going to toss this first one to you. I'm curious, as we look at payments as a kind of perfect use case for stablecoin adoption, what are actually some of the key challenges that you see that still need to be overcome? Obviously, PayPal is a behemoth in payments, so I think we have a lot to learn from you guys as well. So I'm curious kind of what stands out as the next couple of key challenges that we really need to overcome to make stablecoins the de facto technology that people use for payments.
I think there's about three things that we can think about. One is it's just basically the integration. I think it's how fast we can move as an industry and then as PayPal to actually integrate stablecoins into our own experiences. I think two is ensuring that we're first and foremost continuing to think about regulatory forward, compliant, and then driving. The third part is just being like driving the customer value and making sure that's forefront. Because at the end of the day, if we do this all right, which we will as an industry, consumers shouldn't really care about whether they're paying with stablecoins or not. So whether it works seamlessly behind the scenes or it provides the value up front, like that's actually what the work to be done, and that's the actual fundamental opportunity rather than challenge, I'll say, that we have to actually address.
Okay, so I hear you talk about user experience. I know we have a pro user experience designer here, Jess. As you think about kind of that user experience with stablecoins and removing those points of friction and things of this nature, what comes top of mind for you for these key opportunities? I like repositioning that, or key challenges along the way.
Yeah, I mean, I'm definitely not a UX designer, but I'm lucky to work with many great ones on our team. I think that we see still that there are some really key issues when consumers are using crypto directly. As Mai said, I think like a lot of it is when it's under the hood and behind the scenes, consumers can get a lot of benefit without the friction points. But as soon as it becomes more at the forefront of the consumer experience, there are still a lot of things that today we need to really address. Those include, for example, a consumer needing to know what chain their asset is on. It includes a consumer wanting to use one particular stablecoin, but, for example, a merchant only accepting a different kind of stablecoin. It still includes needing to have gas fees on particular, or gas tokens on particular chains in order to be able to send a payment. So a lot of these things we now have technological solutions for, whether that's for our smart accounts for sponsoring gas, or infrastructure that allows us to make the chain kind of disappear in the background. But that's not the predominant form factor today. Still, the predominant form factor is the end user is faced with a lot of decision making and a lot of friction points in that journey, especially if we're talking about a consumer payments journey. That over the next, I'm very optimistic about this, by the way. I don't think it's a bad thing, but I think over the next 12 months, we're going to see a lot of evolution in that regard, so that a payment can become a one-click process for a crypto holder.
Okay. And Chris, do you see this as kind of a similar journey from your point of view? I guess, how does adoption of stablecoins change from region to region? I know you guys are specifically, the largest player in Africa, and I'm curious, as Jess is touching on those user journeys and those user experiences, what are these use cases that you're seeing most prominently in Africa?
Yes, so I do totally agree that user experience is one of the biggest hurdles, because the native user experience of stablecoins or any blockchain asset for that matter sucks. If you screw it up, you lose all your money. It's not like that. Nobody wants that, right? The only thing that sucks more is the native user experience of the US dollar. Having intermediary banks, having, SWIFT, having your money take, 4 or 5 days to get to where it needs to go. Banks that then have a complete monopoly over the rails and therefore the FX and demand, certain pricing, all of that. And so the dollar is also a very bad user experience, and again, that's what stablecoins are solving when you look outside of the US. And I think that the ability for people and businesses to use the dollar outside of the US and within international markets where traditionally using the dollar requires you to go through New York, right? Requires this whole complicated intermediary banking process. That's where the biggest opportunity is. It's not in the US where the system generally works. It's not in Europe where the system generally works. It's in emerging markets where those systems don't work. They don't have proper connectivity to New York. They don't have proper connectivity to the banking system. And, look, frankly, I think that's why, some of the stuff that May and PayPal and these Web 2 companies are doing is so important. Because you have companies in the past that have fixed the user experience of the dollar, right? PayPal, for example, makes the dollar not suck as much when you need to use it for international payments. And now with Web3 and with stablecoins, there's an opportunity to do that again. And so, that's why we focus so much on the corporates, the financial institutions, the banks that are working outside of the US, how do you take this technology that fixes these problems, make the user experience good, right, and give it to people in a system or in an environment that they're used to. Give it to them in their bank, give it to them in their mobile wallet, give it to them in the fintech that they already use, rather than trying to get everybody to download a wallet and change everything that they do in their financial life.
And are there specific use cases that you're seeing like native to Africa that we wouldn't expect to see in other geographies?
No. Payments. I mean, it's payments, right? Like everybody wants to make payments, and they want their payments to get to where they want those payments to go. I think there's a lot of issues with intermediary banking and access to dollar on the continent specifically that gets a lot of attention. But I think that the payments problems that you face in Africa, while they might be exaggerated versus the rest of the world, are very similar to what you see in a lot of other emerging markets.
Okay. And Lou, I'm sure you expected I was coming to you next. Obviously, AAA is a major player globally, but you do have quite strong coverage in Asia. I'm curious what we can learn about the kind of Asian region as well.
So I guess to add on what Chris just said about stablecoin global use cases, stablecoin is a natural way for everybody globally in every single country to get access to US dollars. And particularly coming to Asia, and I think even Africa, a lot of cases that we're seeing is importers in Latin America, in Africa, they need to pay invoices to APAC, right? They need to pay invoices in US dollars to Singapore, they need to pay invoices in US dollars to China, to Hong Kong, and historically without a stablecoin infrastructure, it's very hard for them to just locally getting their money converted into US dollars. Like, let's think about Argentina, where historically it's super hard to convert for them, either businesses or individuals, from ARS to US dollars and then sending it to pay those invoices. So stablecoin is really providing a way for everybody globally to be able to pay, to get US dollars and do payments with US dollars.
Okay, thank you. Yeah, I think, so one of the interesting things we see at Borderless is people love stablecoins as a technology. Instant settlement, moves quickly, accessible. One of the challenges, though, is also around kind of expectations, similar to kind of the traditional financial system, where you can have kind of recourse for things that don't go as planned. So how do we, I guess, build for this and take this into account? Because I think until we have some understanding of, I guess I come from a DeFi background. I love building permissionless systems. DeFi is kind of where my bread and butter is, and you can use it without fail. However, it's a very different world when you come into traditional payments and how we build towards traditional payments. And so I guess, May, I'll come back to you from PayPal's perspective. What needs to be accomplished with respect to kind of recourse and accounting for things that don't go as planned with kind of this finality or this permissionless composability of stablecoins naturally?
Yeah, I think you just have to think of where the use cases are. So I love what Chris, you were saying earlier, like when you think about just a Venmo user or a PayPal user can now send to a yellow card user instantly within seconds and interoperable and land in each other's wallets. Like, that's super powerful, right? And so does that use case, you have to think about what does that use case need and what protections or what mindset does the consumer need at? Or where she was talking about earlier about like just B2B invoices, right? Now there's things that can be programmable that add safeguards in, right? And that's what stablecoins can do. There's things that when you think of just standard a wallet-to-wallet user, it's different protections that you can add in. And there's things that don't need it. Actually, the fact that it is instant, it has finality, is the protection in itself for the business. And I think that's what we have to really think about, where the power of everything is, versus trying to say the industry today is built in a certain way, and let's try to now bring stablecoins in the crypto industry and replicate all the things that may or may not be really actually valuable. I think we have to look at it, flip it on its head, and look at it in the other direction as like, where is that use case? Where do you need to provide that protection? Where does that make sense? What value does it really bring? Instead of trying to drive sometimes too much overhead, and then take the nature of programmability, the nature of finality, bring those as assets actually exactly for this and provide it in the use case.
Interesting. And so I guess, Chris, then, how are you guys handling a lot of these kind of when things don't go as planned scenarios for your users currently?
Well, everything just always goes as planned. That's no. I think. Look. The most important thing, with this technology, I think, is abstracting a lot of it away from the user. I think somebody said earlier, or actually it was you, that people love the idea of stablecoins, right? But the actual tech is not something that anybody wants to deal with. And so for us, the most important thing is maintaining that control over the infrastructure, maintaining that control over the way that assets are moving, what users are allowed to do, what the customers and everything that we work with are allowed to do, in a way that again still obviously allows them to control their money. Right? We're not a bank. We're not going to stop you from using your money, but we want to at the same time make sure that they're not doing things that are going to hurt them, right? And that can be as simple as flowing assets through one wallet before it ends up in another wallet, right? Because people will receive dust, people will put their wallet out there. We see this all the time with companies, and they'll receive all sorts of crap coins and all this other stuff that would clog up their wallet and clog up their systems. Abstracting away, gas and things like that, right? Making sure that all gets taken care of on the back end. It's really about just, how much of it can you show, right? Because people want to see USDT in their wallet. They want to see PYUSD in their wallet. They want to see USDC, but they don't necessarily know what that means, and they don't want to deal with it. And what I always liken it to is WhatsApp. Right, I use WhatsApp every day. I have no idea how SHA-256 encryption works. Not a clue. Like, if you asked me right now, I would just walk off stage. No idea. But I don't need to. I don't need to for me to benefit from the encryption technology. I don't need to for me to benefit from being able to message with anybody over the internet anywhere in the world. I don't need any of that. And so, just abstracting as much of that away as possible, I think, is really the key.
Okay. And so, I guess as we're considering all of these protections and the adoption of stablecoins, another thing that we're observing is kind of this proliferation of everybody has their own stablecoin. And so I'm curious to kind of pick y'all's brains as to how do you see this maturing as the industry continues to grow? Do we continue to have infinite stablecoins that are all just natively interop with each other in like a really convenient programmatic way? Or do we see consolidation driven by distribution and liquidity and things of this nature? I guess, Jess, you see kind of the whole gamut of things with the way Wallet Connect is positioned in the ecosystem. Which direction do you think things will go?
So I think there's probably like a medium-term answer and a longer-term answer to that. In the medium term, I think it's about making sure that an end user can use whatever stablecoin they have wherever they want to use it, and on the other side, people can accept whatever they need to be able to do that. And we recently launched a point-of-sale SDK that allows people from any wallet on the network to pay directly in crypto. And today, the user experience is that merchant needs to select the chain and the asset, and then the wallet needs to make sure that they have that. We're working on a new standard that we're rolling out in Q1 to all of the Wallet Connect wallets, where the merchant will just be able to display a generalized request, and the wallet will be able to tell you, hey, you have 20 USDC on Arbitrum, do you want to use that? Because that's the cheapest and the most effective route for you. Or you might have 20 USDC on Solana, and everything is abstracted. So I think the medium term is that we have to solve for where the end user is today and the assets that they have. Over the long run, I'm optimistic about the evolution of stablecoins as I hope regulation starts to catch up, because I think eventually we should be able to solve for the fact that a stablecoin could be a yield-bearing asset. For me, it doesn't necessarily make sense that only in the US today can you not have that. And what the effect that has is just rent extraction. There are end users who have balances who aren't benefiting from that today. Or if they are, then they're going through a very complex DeFi process in order to be able to do that. So I think actually over the long run, we're going to see still a lot of evolution around stablecoins. But over the medium term, it's really about solving for the end user.
Okay. And May, having a stablecoin of your own, do you see it do you see it similarly to Jess, or do you see or hope for consolidation around PYUSD?
Well, I think that, look, we were the first fintech to launch our own stablecoin, and in the past couple of years, we have learned so much. So while the hype right now is, I think Genius obviously opened the doors and everybody became super interested to say, okay, should I build my own or should I use somebody else's? And those are, I think, fundamentally the decisions that you're seeing businesses right now evaluate. The good news for us is we've kind of been on that journey a little bit ahead of the game. We've learned a ton within this equation. And so I do think there's going to be a proliferation, exactly as you said. I think, though, if anything across the entire stack of crypto is the same thing. Chains is the next thing right now. Everybody wants to also do their chain. So there is a proliferation of that. So I think what it is the industry's opened up. People are seeing opportunity. People are getting into every single layer of the stack. And there is going to be a multitude across that. But eventually there will be, to your point, I do think, where we converge, there will be a convergence and some consolidation. And I think through that people are going to learn, does it really make sense for me to be going down this far in the stack? Should I really own this, build, partner, or buy equation? And so I think that's part of the industry kind of figuring it out. But of course, I would love PYUSD to be one.
Of course. And that is now the only stablecoin we're allowed to talk about on stage is PYUSD.
And I didn't even tell you that, so I love it.
So I guess, Lou, how do you guys view the distribution of stablecoins? Because with every new stablecoin and every new chain, you guys have to figure out how to kind of integrate and support that effectively, provide liquidity for that as well. Does that become just a complete headache, or do you look at building these interop solutions natively in-house, or how do you view all of that from a liquidity perspective?
So first of all, I want to say we offer 3 stablecoins on our white labeled stablecoin as APM checkout, and it's USDT, USDC, and PYUSD. So we actually we have 3 main products, right? We do stablecoin pay-in, so stablecoin as a payment method at the checkout page for merchants or PSPs would like to white label our solution, and on the payout side, the opposite, so allowing merchants to pay their suppliers with stablecoins. So on both of these flows, we actually build our infrastructure in-house we're our own liquidity provider. And our third product, we are also doing global off-ramping of stablecoin. And we partner with banking partners in the countries that we offer this to be able to offer local rails to do off-ramping.
Okay. And Chris, you guys are in a similar position, needing to provide liquidity for all of these brand new stablecoins and chains. Do you also see it as not so much a problem, or I guess how are you actively solving for that?
I guess it depends who it's a problem for, right? I think the whole point is that it's a problem for us, yes, of course, because there's 7,000 chains now, and there's a new one every day, and then there's 6,000 coins on each of those chains. So that's a problem for us, yes. But the whole point is to make it not a problem for the user, right? And for the business, for the bank, for the for the end customer. It's. Look, I think at the end of the day, at least from a chain perspective, a lot of this stuff is going to consolidate. And you're going to have only a handful of public chains that get used, but that's not going to solve for the private chains. And I think that, the big thing that we've learned from working with banks, working with telcos, working with, these large financial institutions is they're not going to build their systems on a public chain, right? Like they may put out a stable coin on a public chain, but if you're talking about like redoing the way that a bank works, a bank is not going to rebuild itself on Solana. A bank is not going to rebuild itself on Ethereum or, any of these other chains. And so, finding a way to keep up with the number of private chains that exist and that will exist, I think, is increasingly important. And look, the goal is for the banks that we work with, for the businesses that we serve. How do you do this in a way where when one of these large companies comes to you, so when PayPal comes to you and says PYUSD is now on PayPal chain, and we expect you as a partner to work with us on this, how do you make sure that you're ready? Right, because that's coming, right? I mean, not specifically necessarily for PayPal, but like it's coming just across the industry, across financial services, and we're seeing this. I mean, look, every third conversation that we have now is we're issuing a stable coin, and it's coming from companies that you would not expect to be issuing stable coins, right? It's coming from companies that arguably should not be issuing stable coins, but here we are. It's 2025. Everybody gets one, so.
Yeah, I don't know where to go from there. Everybody gets their own stablecoin. You heard it here today. No, wonderful. I think one last thing that kind of I'm interested to explore with you guys is payments come in different forms, right? So we've talked a lot. I think, especially at Borderless, our clients are primarily doing B2B payments. And so there's the other side of the house, which Jess, you alluded to with kind of the point of sale type stuff, which is merchant-based payments as well. What do you guys see as kind of the key differences between those two kind of use cases, or those two user profiles, or those two kind of flows in and of themselves? So maybe Jess, I'll just start with you, and then we can work down the line this way. How do you differentiate between the two, and what's important to consider for adoption of stablecoins for each, right? I think they require very different shapes.
So I think that there's a few things that are very consistent across them, right? People want security. The way that you deliver that security can be very different, though. Typically, in a B2B transaction, you're more likely to be engaging with known parties. So I know who I'm sending to, and I'm probably using some form of custodial or institutional infrastructure to do that, which means that a lot of that security is baked in. With a consumer payment, I have a self-custodial crypto wallet, maybe on my mobile, and I want to make a payment, and I probably don't know that other participant very well. We see it on the Wallet Connect network. New apps are joining every single day, and one of the things that we're doing this year is extending our certification program so that some of those apps will be invited to verify their smart contracts and go through a process where we can then give the wallet user more comfort who they're interacting with. When we do consumer research, and there's a report over there if people want to pick it up, one of the biggest things that stops consumers from using crypto more is a fear factor around who they're engaging with. If I connect my wallet into this application to make a payment, is that wallet going to be drained? Am I going to, be sent a scam link? And so there's a lot of security elements that both sides want, but that can be harder to deliver, I think, in this broader consumer-based world, because you don't have that known factor when you're engaging on a B2B basis. So security is one. Again, user experience is another. What you need on each side of the house is very different there. For a B2B payment, you probably need something that looks much more institutional, might have several sets of signers associated with it, whereas what a consumer wants there is a very different level of friction. They want to be able to make a one-click payment. So there's a whole spectrum, and businesses and consumers are going to sit on side of these. But I think, and Maya alluded to this earlier really well, is we have to stop bucketing all payments as one and thinking that, okay, just because we have a stablecoin, this is the right thing to solve all payments forms. The form factor really matters, and the way that we design the user experience has to be very specific to that journey?
They just need to work. Like, at the end of the day, it's my money. Let it move, and it just needs to work. Like, and you know, you articulated it beautifully on all the elements of it, and I think that's just it. And I think we just overcomplicate a lot of things in the industry. And I bet you, and I know it's Money 2020, but I still bet you, like, more than half the audience in the room doesn't know how actual payments and fundamentals or wallets are created. Like, you just don't need to know all these things. They need to work when I want it to work, and then I think that's fundamentally it.
Yes, and I think, you know, to the first 2 points, right? As part of making it work, you have to treat different types of payments differently, right? Every time I hear of like a chain coming out that's going to solve payments, it's like, man, there's a lot of different types. Like that's just a really generic term, right? It's like, I mean, I can give you cash, I can, you know, send you a bank transfer, I can need to send money overseas, I can be a business making a payment. There's so many different types of payments in this, you know, $100 trillion problem. And I think of it I think of it very similar to like the early days of the internet where, you know, in the beginning you had like Craigslist, right? And on Craigslist you could do literally anything. You could get a ride, you could find somewhere to stay for the night. You could, you know, meet friends. You could do this. You could, you know, date, whatever, right? Now you have apps for each one of those things, right? And the whole internet fragmented into Uber and into Airbnb and into, you know, Tinder for dating and into, you know, all the like other stuff, right? All these things that you used to be able to do on Craigslist now have their own specific app and specific experience for that thing that is significantly better than the experience that Craigslist provided, because Craigslist was just a do anything for anyone type of platform. And I think, you know, to Jess's point, I think that, you know, it's going to be the same with stablecoins. I think that stablecoins solve a lot of problems, right? Like Craigslist solved a lot of problems. People could communicate with each other. That was a huge deal back then. But it's not going to solve everything by itself, right? And like the two main stablecoins will solve a lot of problems, but there will be sort of niche spots in payments that they're not going to be able to fill because they're just not going to be able to give as native and you know, bespoke of a user experience as a specific chain or a specific token or anything like that will. And so, yeah, I mean, I think, you know, that's sort of where the industry is moving. You're going to see just a lot more bespoke and specific types of payments being solved by this industry. And the user experience for everybody, although a bit fragmented, will be much better as a result.
Okay. And Lou, a very quick last thought. I can feel Kevin's eyes in the back of my head burning holes.
So I think they're all, like, to build up to what everybody else said, it has to work, but another consideration is also it has to be compliant. So B2B, B2C, one of the main differences how compliance-wise we need to treat them a little bit differently. At the end of the day, we are all regulated payment institutions, and we need to make sure that all the rules that do apply outside of stablecoins still applies to stablecoins. So, yeah.
Wonderful. Well, I had a great time, so thank you all for humoring me, thank you all for joining us. We shall certainly wrap so that Kevin stops staring at me.